The global landscape is shifting, and China, the world's second-largest economy, is adapting its strategy. It is prioritizing domestic economic strength. It is sending ripples across the global economy. For decades, China's economic engine roared with exports. But the winds of change are blowing. China's leadership recognizes these challenges. The message is clear. China is no longer solely reliant on external demand. It is cultivating its vast domestic market as a new engine of growth. This is a story of transformation and resilience. The recent third plenum of the Communist Party of China Central Committee offered a glimpse into China's economic roadmap. This gathering unveiled key policy announcements. Emphasis is on domestic-driven growth. Real estate is a focal point. China aims to curb speculation while ensuring stable growth. Measures are in place to manage risks. Emerging industries receive significant attention. Heavy investment in innovation. Emphasis on boosting domestic demand. Empowering citizens as consumers unlocks sustainable economic expansion. China is committed to a resilient and balanced economy. China's economic shift comes amidst a backdrop of global trade tensions. The trade war with the United States, initiated during the Trump administration, cast a long shadow. Tariffs imposed on billions of dollars worth of goods created uncertainty and disruption. While the Biden administration has taken a less confrontational approach, trade tensions persist. The U.S. and its allies remain concerned about China's trade practices, intellectual property protection, and market access. Beyond the U.S., China also faces trade frictions with the European Union. Disputes over issues like subsidies and market distortions have led to tit-for-tat tariffs. These trade tensions have highlighted the vulnerabilities of globalization. They have prompted countries to reassess their economic dependencies. China's decision to focus on its domestic market can be seen as a strategic response to these challenges. By reducing reliance on exports, China aims to mitigate the impact of trade disputes. It is strengthening its economic sovereignty. From closed doors to open markets, China's economic transformation. To understand China's current economic pivot, we must revisit its remarkable journey. For centuries, China was a closed society. In the late 1970s, Deng Xiaoping initiated transformative reforms. China opened its doors to foreign investment and embraced international trade. This unleashed unprecedented economic growth. China emerged as a global economic powerhouse. But the world has changed. China's leadership recognizes the need to adapt. China seeks a new balance between external and internal growth. Section 5. Navigating the economic crosscurrents. Challenges and opportunities. China's economy is not without its challenges. The country is grappling with slowing GDP growth, a shrinking workforce, and rising debt levels. The real estate market, once a pillar of economic expansion, is showing signs of strain. Despite these headwinds, China possesses significant strengths. It has a vast domestic market, a skilled workforce, and a robust technological base. The government has a proven track record of effective economic management. Many analysts believe that China needs to implement further stimulus measures to maintain stable growth. These could include infrastructure spending, tax cuts, and policies to boost consumption. The Chinese government is keenly aware of these economic crosscurrents. It is actively adjusting its policies to address challenges and seize opportunities. The transition to a more domestically driven economy is a complex undertaking. But China has the resources and the resolve to navigate this transition successfully. Section 6. The real estate conundrum. A cooling market and its implications. The real estate sector, a longtime engine of China's economic growth, is experiencing a slowdown. Investment in property development has dropped, and residential sales have cooled. This cooling off is partly due to government measures to curb speculation and control soaring housing prices. The real estate sector's downturn has wider economic implications. It impacts related industries such as construction, materials, and finance. A controlled slowdown is desirable to prevent a bubble burst. However, a sharp decline could have significant consequences for overall economic growth. The government is closely monitoring the situation. It is employing targeted measures to stabilize the market. These include providing support to struggling developers and ensuring the completion of pre-sold homes. Navigating the real estate conundrum is a delicate balancing act. China needs to address the risks without triggering a sharp economic contraction. The outcome of these efforts will have a significant impact on China's economic trajectory